For more on this low housing supply and these record prices, let's bring in Andy Walden. He's director of market research at Black Knight. Andy, welcome. Does your data corroborate this, and where are we going from here?
Yeah, that's absolutely. I mean, everything Diana said is spot on there. We're seeing the same thing when we look into our collateral analytics data set, which is kind of a real-time stock ticker of what's going on in the housing market. We're seeing things reaccelerate late last year as well for all the reasons that Diana just mentioned. Though affordability was still relatively strong at the time. That's changed a little bit here as we moved into 2021. But again, it's bumping into that record low levels of supply out there. And the supply issue has actually worsened as we move toward the tail end of 2021.
Is there anything that can be done to help on the supply front?
All of the things are pointing in the wrong direction at the moment, right? We look at what's going on with new build activity and the supply challenges there, but really the broader issue that you're seeing there is those traditional home sellers out there that are really the ones that feed the housing market. We're going on 2+ years of a deficit of listings out there in the housing market. It's gotten a little bit better, but we're still running double-digit deficits from where we should be for this time of the year.
And that suggests prices will keep going up even as rates go higher, what does history say about how that pattern usually plays out?
Yeah, and if you look at affordability, we've really seen some tightening here over the first 3 weeks of 2022. 30-year rates are up almost 0.5% so far this year. If you look at the average buyer out there shopping for a home, it's costing them $330 more per month today than it was at the same time last year. So really starting to see affordability tighten. We're now kind of, if we're looking for historical comparisons, we're in that 2008-ish time frame. So we're definitely in a portion of the affordability curve where we should be seeing home price growth slow down, and we likely will see that here in coming months. But it's held higher than it otherwise would have been because of all of those supply shortages that we just talked about.
Yeah, and like Diana was saying, if it pushes people into the rental market, they're going to face high rents there as well. It eats into their budget then to be able to buy a house. It's a tricky situation. On the refi piece of it, which I know you guys also track, what's the latest there? I have to imagine that activity is drying up, and that would probably be a headwind for a lot of the banks and issuers.
Yeah, absolutely. And if you look at where we were from a refinance incentive perspective entering this year, we still had about 11 million refinance candidates out there. Still a pretty strong population. Over the last 3 weeks, given that almost 0.5% rise in rates, we've seen that cut to just over 6 million at this point. So certainly some headwinds, strong from a historical perspective, but nowhere near the volumes that we've seen throughout 2020 and 2021.
If you had to make a guess, how much higher do you think home prices are going from here?
It's really tough to say, right? And I think a lot of that story is going to be told here over the next couple of months as we see interest rates move and as we see affordability move. But I think the big storyline that's going to drive home price growth this year is going to be that inventory. Do we see any kind of meaningful rebound, or is this deficit here for the foreseeable future, which would lead to higher than otherwise expected home price growth?